Good morning, traders. Welcome to Beyond Profile. Today is Thursday, February 24th, 2011, and the markets dropped off a little bit more last night. Oil continued on to 102 a barrel, and the bonds are back at the top of this value area. 22s look like self-fulfilling prophecy here in a lot of these things as they work their way back up to the top of this last value area. Actually, we could say 20, 21, 26. So we're getting close. May want to watch the bonds today for some short entries as the markets have gotten down to some key reference areas here that we'll be looking to actually start to nibble on the long side here. Let's look at the S&P. The S&P chart. You can see yesterday we took care of that one gap at the 0850s. Actually, 750 was the number. There's those two high volume numbers we talked about. We only have one more gap that potentially this could run down to 1282s. This morning, I think we focus in on shorting the 1305 area, 1306. If we get any bounce into that, we short it, back down, re-challenge some of these lows from the overnight, and look to maybe see if we can't get continuation down here. This would be day number 5. Well, today would be day number 4. Day number 5 would be on Friday to get us down to that number. And that would be a serious correction. As a matter of fact, we would be getting close to, on the NASDAQ, we were talking about a 10% correction, and we may be getting close to that. I mean, we'll look at the daily chart here. But so the routine today would be is to sell those 1305s, these high volume notes here, coming back up into that this morning and looking for a break, maybe even get the second gap filled down to 1282. That's on the S&P. Let's look at the NASDAQ. All right, here's the NASDAQ daily chart, and this one here almost back into that whole wide range candle from the Egyptian news back at the end of January when we had those first uprising over there. We had that big sell-off, and then we continued to rally up. I mean, we've come back actually and filled this gap yesterday at this 84.50 number. We've got it shut down now last night, and you can see actually if one market's going to run out of here quickest, it's going to be the NASDAQ. I would be most aggressive on the NASDAQ on the long side out of this area versus the S&P. The S&P actually has some more potential to come down, and when you look at how far we were at 2,400, right? So if you look at 240 points down. We got a little bit more to go, obviously, for a 10% correction, but we're getting close. All right. So if the S&P continues, we may actually end up challenging the bottom end of this, which would be that 2260 area, right? 2260s.